ahead and introduce you to our next speaker, a great friend of mine, Mr. Michael Amar. Can everybody see my slide? And Micah, I'm going to make you organizer.
Awesome.
Oh, there you are. Can everybody hear Micah okay? Let's wait till we get some yeses. I'm about to give away $50. Let's see if that gets some yeses. Who wants $50 today for Jeanette and PayPal? All right. Okay, so we have three speakers today. Let me go back. Jeffrey Brewer, who you just heard from Pro Market Software, his offer today is $97 for a course he's doing live on January 7th. It's TradeThirsty.com/swing. Michael Amar on deck next, and then we'll round today out with our friends from MTI. William Gallagher is their speaker today. He's going to be talking about trading the London Open. Okay, so I heard Micah. He's there. He just did a quick little sound test. So before we move forward, we're going to play a little trivia, a little Christmas trivia, and this is from my favorite Christmas movie, and it's just the way it is, Christmas Vacation. So if you've seen the movie Christmas Vacation, then you know that it's about the Griswold family. And so in the movie, so the first person that can answer the question in the chat gets $50. Yes, it is Chevy Chase, but that's not the question, Francis. Thank you for paying attention, though. Okay, so the question is this. What does Clark plan to do when he gets his Christmas bonus? What's he going to... Swimming pool. Scott wins. Swimming pool. Swimming pool. All right. So, Scott, post your PayPal address, your email address for us here in the chat box, in the questions box, and I'll have Sal scribe it, and we'll send you $50. We're going to play this again at the top of the hour. It'll be from, it'll be something different. It won't be from Christmas Vacation, but we'll have a little fun with it, give away a little Christmas cash for y'all for spending your Saturdays with us. Okay, so Micah is on deck. I'm going to go ahead and make him the presenter so he can put his stuff up on the screen. And there we go. Go ahead, Micah, share your screen when you get... Oh, there we go. Boom. Okay. Love it when technology works. WallStreet.io, how to find the best entries and exits in only 15 minutes a day. Michael Amar, thank you for being here with us today. You have 1 hour.
Fantastic. Thanks for the warm welcome, Jeanette. Great job, Jeffrey, by the way, if you're still on. Really loved the software you were making, and a big thank you to the TradeThirsty team. It's always fun to get people together, especially on a weekend, and talk shop on trading. Today we're going to be talking about finding entries and exits. I'm a super busy guy. I've got a jam-packed life right now, and so it's really important for me to be as efficient as possible in my trading. So today I'm going to kind of walk you through some case studies for some trades that I made recently, and kind of show everybody how I am able to swing trade in a very short period of time every day. I think you're really going to love today's presentation. I love interactive presentations, so I'm going to be asking a lot of questions. I could already see this is a super interactive group. I love how fast Scott got the swimming pool thing. That was awesome. And so feel free anytime to ask me questions or be engaged in the chat room. Quick little disclaimer, Wall Street AO, we're not registered as a broker-dealer. We're not an investment advisor. We're really for educational purposes only. Of course, past results of any trading system or methodology doesn't necessarily guarantee future results. So today, what we're going to cover specifically is I'm going to walk you through my routine. Again, something that you can do in a very short period of time every day. I'm going to go through some case studies. Like I said, I'm kind of an options geek. I do trade stocks still, but I also trade a lot of options. I'm going to show you some trades that I did recently in Apple and in Tesla. One of them made 113% in 2 days, which was pretty great. A trade management trick that I used to zero in on exact entries and exits. And one of the best option strategies that I love to use for 3-day swing trades, and how most people kind of get this one a little jumbled because it's a little counterintuitive. So before we actually jump into this first bullet here, I just kind of want to get a poll from everybody listening in. What's your biggest hurdle right now in your trading? What are you kind of stuck with? The reason I ask is because I really want to make sure today's presentation is tailored to this group. I want to make sure that we have the biggest impact in this hour and that you really walk away with something valuable and actionable that you can go and start trading with Monday right away. So go ahead and let me know in the chat room. I'll kind of just hang out for a second and see what I get. John says, option timing, I got you there, John. A lot of people saying getting stopped out, entries and exits. Yeah, I'm right there with you. So I think you're really going to enjoy today's presentation. Deciding when to buy, a little bit of uncertainty. Baki even says taking profits too early, entry is getting too late, hard to pull the trigger, too many stocks. I've got a solution there for you. All right, so we've got some really great answers. Thank you so much for that. I also want to let you know that we are going to have a quick little contest all around an option strategy in about 25 minutes, so stay tuned. We're going to be giving away this really sweet Wall Street AO mug, okay? So let's get started. I want to go ahead and kick it off with an Apple case study, okay? Again, for anybody who, well, let me just see. Is anybody out here trading options? Go ahead and let me know. Is everybody here trading options? Here's an option trade. I know this may be a little overwhelming at first, but let me just kind of walk you through it real quickly. I was trying to show my students some of the differences between just buying shares and the leverage that you could get with options. So rather than just doing one of them, I decided when I got triggered into my swing trade, this was just last month, that I would do both. So you see this green section at the bottom. This is basically me opening a position in my brokerage account. I bought 100 shares, and at the same time, I also did a 5-point vertical spread. A 109 by 112 call. I paid like $76 for it, and then when I sold it a few days later, I think it was 6 days, I sold it for an average of 157, so it was about 106% return on investment in 6 days. That was pretty sweet. So I want to actually walk you through that trade setup and kind of show you my thinking around the whole thing so that you can kind of get where I'm coming from. It looks like every single person here is trading options. Awesome. I am a total options geek. I love the Greeks. I love just the complexity of them. So really cool. I'm glad everybody is trading options. So let me do this. All right, very cool. Okay, so anybody here trading Apple? I love Apple. Before I was running Wall Street AO, I started a company called Apple Trader. You may have heard of it. We were one of the biggest communities of Apple traders in the world, and then we kind of changed to Wall Street AO because we wanted to start trading some other stocks. So what we're looking at right now is basically an Apple daily chart, right? We've had a really nice run up over the last week. One of the simple swing trading things that I discovered a while ago is probably the most simplest thing you're going to learn today. How many people here are using candlestick charts? Probably a lot of people are using candle. Okay, cool. Now, I'd like to invite you to try out what we call payday cycle charts. Other platforms call Heikin-Ashi charts. Okay, so you can see right away that there's this huge difference between this candlestick chart, right, which what we're looking at right now, and what I would consider to be a payday cycle chart, slightly modified Heikin-Ashi chart. Okay, most broker platforms, your TD Ameritrades, most brokers are going to have a Heikin-Ashi chart for you. Okay, what is the biggest difference that you see right away between these two charts? I'm just going to go ahead and flip back again real quick. Here's your candlestick. Here's your payday cycle. Let me go ahead and see. Elton says, hey, I use the Heikin-Ashi too. Really cool. John says it's the trend is easier. David says it's smoother. John says there's no gaps. Less confusion. Exactly. There's no gaps. It's smoother. So everybody's kind of on the same page. It's a lot easier to see the directionality of a stock. For me personally, I'm a super visual person. So when I see, what I would consider to be a payday cycle, starting, it's really easy for me to see it because it's green. And when a bearish payday cycle is starting, it's red. I mean, it couldn't get any more simple than that. When I first started using these a few years ago, it really elevated my trading because I stopped holding calls during bearish cycles. The reason I call it a payday cycle is because when we've run all the numbers on it to find the average length of each cycle, it turns out that they cycle, most stocks cycle, Apple specifically, for about 4 to 8 days, which means you're able to get into a swing trade a couple times a week, which also means you're getting paid twice a month. Most people who hold a 9-to-5 job get paid twice a month. So I call them payday cycles because it's like a payday every, 2 weeks. Okay, so I'm just going to kind of check out the chat, make sure we're good to go. All right, yeah, Sam says consistency. All right, so we got some great questions here, John, and a couple other people. I'm going to be answering these along the way, so just kind of bear with me for a second. But again, just a simple introduction to Heiken Ashi. Again, I call payday cycle, and again, this is the Wall Street.io platform that I'm using right now. Okay, so before I kind of jump into this Apple trade, which I caught from basically from down here up to here for this specific case study. Actually, it was a little bit farther over like this. It was 6 days long. Very small move. It was only about $3 or $4, but I was able to make over 100%. It was a really cool option trade. I'm going to walk you through the specifics of it. But one of the things that I discovered from a theory of mine was that when you have really long payday cycles, or let me kind of step backwards for a second. One of the things I was trying to figure out was how could I get more confirmation? How can I have a little bit more confidence, a little bit more reliability in my swing trading? And I started using the MACD, and I know this sounds really, really uberly simple, but just bear with me for a second. My theory was, quite simply, when the MACD was crossed to the bulls, let me kind of erase this so I could start over. When the MACD was crossed the bulls, which means these two lines here are across the bulls and trending higher, my theory was that when that's happening, the payday cycles going up are longer. And on the flip side, when the MACD here crosses to the bears, like I'm showing you here, the payday cycles to the upside are shorter. So quite simply, you could stay out of a lot of trouble by not getting long during a bearish MACD cross, right? So I had that theory. I kind of traded around it for a long time, and it was really great. I made some amazing profits with me and my students, but I really wanted to put my theory to the test, okay? So my team and I kind of got together, and we're like, okay, how can we do this? So here's what we came up with, and I'm using this as like an introduction to my strategy to kind of give everybody a little bit of an idea behind my framework. Again, something that's going to be actionable for you right away on Monday, and something that every charting package is going to have: a candlestick or a Heiken Ashi chart and a MACD, right? Pretty simple stuff, okay? So what we came up with was this new tool that we call winning streaks. Essentially what winning streaks does is it goes through and grabs every single payday cycle over the last 10 years, and it gives us an average days. So what we discovered from this tool is that Apple's average payday cycle to the upside is 4.5 days, and its average cycle to the downside is 3.5 days. Now, specifically what we were wanting to test was how this relationship could change when you add the MACD indicator. So what we did is we created this really cool tool, again, winning streaks, and this whole mechanism here for us to add an indicator to it. Okay, so whenever I add the indicator, it essentially changes the data, right? So now I know when you have a MACD and the MACD is bullish, you can see that here, the average payday cycle to the upside goes up from 4.5 to 4.8, but more importantly, the average down cycle goes from 3.5 days down to 2 days. That's pretty good, right? Now, here's the real kicker here. Check this out. I just clicked bearish on my MACD indicator. Here's what happens, okay? This is so important for people to understand, and it's so simple. You can do it with any trading package out there. When the MACD's bearish, your average payday cycle that's bullish drops from 4.5 days to 2 days. So essentially what this is telling you is your probability of success is going way down when the MACD is bearish, okay? If you want a really, really good probability of success, then you probably should get long Apple during bullish MACD cycles, right? Because we just ran all of the data for 10 years, and it proved that when the MACD is crossed to the bears and trending down, your average bullish cycle goes from 4.5 days down to 2 days. So your probability of being successful getting long Apple during a MACD bearish crossover is diminished because of just the law of averages, right, from all that data that we just collected. So does that help everybody? Again, very, very simple. You can do it at any trading package. It's actionable. You can take that away on Monday and start using it right away. Somebody asked, is this a daily chart? Yep, it is a daily chart. Is this available on Thinkorswim? Yeah, Thinkorswim should have the MACD and the Heiken Ashi chart, absolutely. They won't have the winning streaks tool. Obviously, that's a tool that me and my engineers built. Everybody says, yes, that was very helpful. Okay, very cool. Okay, so someone says, what means payday cycle? Again, you could probably find the same kind of chart as a Heikin-Eshi chart. Okay? Okay, very cool. Good questions, everybody. Does this work on most stocks? It does work on a lot of stocks, but just a little warning. Every stock trades differently, right? I think we could all agree that every stock ultimately trades different. Every stock has its own characteristic. Your Apple is going to trade way different than Ford or GE or even SPY. So we can safely say, because I've run the data, that Apple and the MACD are a good sync. However, Apple SPY and the MACD is not as synced up. Let me actually show you that right now. Okay. So before I jump in there, let me walk you through this Apple trade that I did. Okay. So now that you kind of have a little bit of bearings around my strategy, payday cycles, MACD, that whole philosophy, I want to show you what I did. I'm just going to go back to a regular candlestick for you. Okay. So I caught this uptrend right here. We had a bottoming tail hammer. We had a little bit of a inside day there. I got in at the end of the day, and lucky me, the next day the stock goes up $3, and I'm in this super leveraged spread, which was really great. I rode the trade for 6 days, and I got out up here. So again, this was the trade cycle. Okay. Now, part of my strategy is payday cycles in the MACD. I would consider, if you were to look at a complexity level of swing trade strategies, that's like the easiest to understand. It's the simplest to use. You could do it on any trading package pretty much, because they're going to have your Heikin-Eshi chart and your MACD. One of the things that kind of has helped elevate my trading was this idea behind strategy development and strategy ideas. Okay, so what I did, before I kind of get into that, what I did here was, when the stock was at 107, I'm going to get rid of this here. When the stock was at 107, I did a vertical spread, and this may be a little bit counterintuitive for you, but essentially I bought the 109 call. I sold the 112 call because that was my target here. That was like a resistance area, right? So I did a 3-point vertical spread, and it was out of the money, and I only paid $76 for it, and it was a 3-point spread. So as a simple law, this is consistent across all options. Whenever you do a vertical spread, this is a law of options, a vertical spread with the same expiration, the size of the spread is going to tell you how the risk reward kind of fluctuates, right? So if you have a 3-point spread and you pay $76 for it, that means you have $224 possible reward. It's the law of vertical spreads. So the risk and the reward added together always equal the size of the spread. So as a simpler example, if you have a 10-point spread that you pay $300 for, you've got $700 of max reward potential. If you pay $500 for it, then you have $500 max potential. If you pay $600 for it, you have $400 of max potential reward. This risk and the reward always equal the spread. So it's a really easy way for you to determine the risk reward of your vertical spread before you get in it, because you know that both sides have to equal the size of the spread. So looking at this specific setup, paying only $76 for something that I could potentially make $224 for, I'm naturally set up with a great risk reward. Okay. Make sure there's no questions. Okay, really good questions so far. If I missed any of your questions because they're kind of flying through, let me apologize in advance. Okay. Yeah, Francis, I sold the call right where I was thinking it was going to go to. All right, cool. Good questions, everybody. All right, so kind of taking this one step further, a little bit more advanced here, but one of the things that we built on top of the winning streaks tool that I showed you is we wanted a really easy way for us to see if an indicator is a good match for a stock, right? Because everybody's got there's a million indicators out there, right? There's your MACD, your stochastics, there's moving average crossovers, there's all these things out there, and especially with this whole idea, and I think we can all agree that every stock ultimately trades differently, it's safe to assume that Apple trades differently than, SPY, right? So what we did is we created a backtesting mechanism inside of our charts that we call Smart Studies, okay? So what Smart Studies does is when you add an indicator, like the MACD, Smart Studies basically grabs the MACD here where it crosses, and then goes and looks at the price of the stock and grabs the closing price that day, and then finds the place where it crossed again and grabs the closing price that day. And basically what it does over here is it gives you the strategy and how effective it is. Okay, so you can see right here, let me just walk you through this real quickly. Let's just look at the last 3 years, how about? All right, cool. So what this is telling me essentially is over the last 3 years with the MACD, we've got some really cool results. Let me just refresh this to make sure everything's up to date. All right, cool. So what we're looking at is we find the average amount of days the stock's in a trade. We find the average dollar move that the stock moves, and we tell you the batting average essentially. Okay, so it's a really powerful way to quickly see if an indicator works with a stock. Now, what we discovered in this process was that not all stocks are created equal. Again, for example, we've got the MACD and the SPY. When I turn this shading on, you can see that the MACD and the SPY can be a match sometimes, but it's not a match all the time. Okay? Sometimes the MACD works really, really great with the SPY. Sometimes it doesn't work at all. But again, I think that it's important to know before you get into a trade whether the indicator is actually a match for your stock or whether it's not a match for the stock. Okay? So when we actually take the MACD and make it bullish here, one of the things that we discover when we try and use the MACD with the SPY is that over the last 3 years, you actually would have had 23 losses and only 10 wins. Now you tell me, is that a good batting average? Would you be okay with a trading system that had 23 losses and only 10 wins? I think that's probably not the best strategy. Okay? And you can even see here, these little bubbles here are losses and the green bubbles are wins. Here, during the SPY period of time, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 losses in a row. I mean, that's horrible for any trading system to do 9 losses in a row. Now, I could come here to the Smart Studies thing and I could slowly kind of change this, right? And I have different results. I could change it from a 12 to an 11 or, you know, maybe a 10. And I could sit here and manually update this and try and find a strategy that works. Try and find something that has a good batting average, that has a good average win versus average loss, and has a good amount of days. I could sit here manually and do it, but that's no fun. That would take me a long time to do. For me to go through and find the optimized MACD settings for the SPY to try and figure out if there even is one that works with the SPY, it would take me a long time to do. So one of the things that we built after our backtesting tool here, Smart Studies, is we wanted a way for us to optimize a specific indicator with a specific stock. Because I think we can all agree that every stock trades differently. And our opinion is that you should have an optimized indicator for that stock that you're trading rather than a global default indicator. Okay? So what we built is a tool called Prometheus. Prometheus is essentially a super processor that goes through and calculates through every single permutation here and gives you the best results. Okay, so let me go ahead and sync this up. What this is telling me is that there's 28,000 possible combinations for the MACD and SPY. Who here wants the best SPY MACD settings? I could run it for you right now, and I'll give it to you. This will be a nice little bonus for you. Okay. Frank says, what kind of platform do you use in the moment? This is Wall Street IO platform. What charting system are you using? This is the Wall Street IO charting package that we built. Okay, so I'm going to go ahead and start this right now. And basically every single little thing that you see here going through is our super processor going through and calculating through each one of the 28,000 different permutations for the MACD. It's pretty impressive. When we run it on our big machine, we can calculate through 60,000 permutations a minute. Okay, so currently on Wall Street IO, this is a real number here. Let me show you. Go to our homepage. Currently, we've processed over 1 billion strategies in the last few months. This number is actually accurate, and it will tick up every few seconds. This says 750 million, 812 million. It'll go, I think, over 1.3 billion strategies that we've tested. Okay, so you can see currently We've gone through about 12,000, 13,000 of the 28,000 possible. And basically what it does is it just spits out the results in a nice little table here. So then it shows me the best MACD settings for 1 year, 3 year, and 5 year. And then I can actually click it and say, show me the worst settings as well, because maybe I want a strategy that'll be bearish. Okay. So currently, if we just take a look at this setting right here, and we're not done yet, we're about 20,000 in. But if we take a look at this setting here for the MACD, let's see what these results do compared to the results of the standard MACD on the SPY. Okay, do you remember the standard default settings on the MACD that you're going to get out of the gate with any trading package had 23 losses and only 10 wins. If you tweak the settings according to what we just calculated here, you get 43 wins and 18 losses. You can see this right here. And more importantly, this strategy was profitable. This little number across the bottom with all those years tells you if the system was profitable or not in each year, so you can kind of get a 10-year glimpse. This thing right here was profitable 9 out of the last 10 years. Now you tell me, is that a better strategy using the MACD? I think it is, because the results don't lie, right? So would you rather have 23 losses and 10 wins or 43 wins and 18 losses? So what's interesting about this strategy is it's very contrarian, right? It's very contrarian because you can actually see the MACD setting is to bearish, right? So write this down. This is something that you can steal from me right now. 3, 25, 8. And this is only for the SPY. It may not work on other stocks, but it works on the SPY. 3, 25, 8, bearish. Now again, what that means is it's getting you in on the bearish crossover. So when the MACD actually crosses to the bears is when it's actually getting you into the trade. Okay. Now look at the difference in some of these winning streaks, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 wins in a row. Completely different than what we were looking at before with 9 losses in a row. And again, because the market has been so bullish, this strategy actually gets you in on the pullback, right? So that's why it's a contrarian strategy. It's a little bit outside of the box, but the results don't lie. We've just run it through all 28,000 combinations, and this was the best MACD settings for the last 3 years. So I wanted to kind of give everybody a quick glimpse of our Smart Studies backtester, right? Our Prometheus super processor. What Prometheus does is it runs through all those calculations, and then we actually take the results of it and we put it up here into a tool that we call Leading Strategies, which are basically all the results, and you can see, you can kind of thumb through them. Okay, so I'm going to kind of scroll back over to Apple, and I'm going to wrap up this case study with how I've been using Leading Strategies. Right, I'm going to go to my favorites here, and here it is. Here's one of my favorite Apple strategies. Right, so you can see right here, this strategy, let me kind of zoom in on it. This strategy for Apple, you could steal it if you want. Here it is. It's the 10 stochastics bullish combined with the 262 bullish MACD. Steal those settings if you want. This strategy got me in right here on this day. Do you remember when I outlined my case study for Apple and I said I got in the day before it had this big move? Well, there it is, and then it got me out on this day. It was a 6-day trade. Now, what was really important about me setting up my option trade, selecting my strike prices, selecting my expirations, getting in and out of the trade was the data that this tool presented to me. Okay. Before I got into the trade, I knew exactly how successful this strategy has been over the last 10 years. It only lost in 2008. I know what my batting average was, but more importantly, this tells me that the average win won $2.41. The average loss only lost $1.10. So earlier, Jeffrey, in the last presentation, was talking about it's really important when you look back on your trading strategies to know that your average win was greater than your average loss. Well, here it is right here in simple math, right? It shows you $2.41 win, only $1.10 loss. That's a good strategy. More importantly, or maybe equally as important, days. It tells me the average length of this trade is only 3.3 days. So here's where we kind of get to have some fun with how we select our option strategy and strike prices. If we know the strategy is only going to last 3 or 4 days, and in the very max, like in this case, 6 days, there's really no reason to buy 6 months of time in your option, right? You already know about how much it's going to move and about how long you're going to be in the trade. How much easier is it for you to plan your life, especially for you busy people like me, plan your life around your trading. Okay, I had twins earlier this year. They're now 10 months old, and so I love spending time with them. I prefer to hang out with my twins, and so when I have data like this, it's really easy for me to schedule my life appropriately so that I can be with my family and stuff like that, right? Very important things. Let me make sure there's no more questions. I got you. Somebody says amazing software. Somebody says brilliant. To buy the bearish. So, yeah, I do. I've gotten bearish trades. The bullish settings for Apple. I'll show you those again. You can steal them for me if you want. 10 stochastics bullish, 262 bullish. This is fantastic. What is your website? Wall Street AO. Don't go there yet because I got a really amazing deal that you won't get on my website for you. Yeah, exactly. Exactly, Francis. Exactly. You got it. Okay, cool. So far, you've learned about payday cycles, right? These natural cycles that are occurring naturally. You learned about my theory with the MACD and how it impacts the cycles and how we actually tested it and proved that theory. I showed you Prometheus, which is our super processor that calculates through all these different permutations of indicators. Because again, my theory was that each stock is different and should require a different optimized indicator. Turns out I was right because when we actually ran the data against it, testing over 1 billion strategies, that it came out almost in every single case that we found that you're going to be a lot better off using an optimized setting rather than your default out of the gate setting. Okay, but again, the issue with that, the problem is that for you to go through and test one at a time, each thing here, you're going to have, just with one indicator of the MACD, 28,000 tests that you'll have to run. Right? So you need to leverage big data and leverage technology. Okay? All right, let's see where we are here. Apple case study, 106% in 6 days. Here is my trade. This is a screenshot from my brokerage account. Okay? Let's look at the chart. We just did that. Here's where we're going to have some fun. Okay, I'm going to have a little contest here. We're going to be giving away a Wall Street IO mug, which I think people are going to love. It's guaranteed to make your coffee or tea taste 10 times better. Okay, make sure there's no questions first. Yeah, good question. Does your software work on indicators other than the MACD? Absolutely. We have currently, we've got lots of indicators. The back-testable ones are moving average crossover, right? Moving average crossover, MACD, stochastics, and you could put a date range in there or a moving average cross, or just a straight above or below moving average. What's cool about that, though, is you start to combine them, like the stochastics MACD combination. We find that a lot of times two indicators that are optimized together actually work better a lot of times than a single indicator. But that's a really good question. Okay, so here was the outline of my option trade, and again, this is I'm going to geek out on some option stuff here for a second. So if you don't trade options, just kind of bear with us for a moment. I took this screenshot of a risk graph. And this kind of shows my 3-point spread, okay? You can see here, this is what I would consider to be a bull call spread. I bought an out-of-the-money call, and I sold a further out-of-the-money call. This is a directional trade. The advantage of this is, again, only risking $76 a contract is a plus, or a spread. Max reward, $224. So you can see that there's two things that I'm doing here in my trading. On one side, from a technical analysis perspective, I've got an edge because I know payday cycles are longer when the MACD is bullish. I also have leading strategies powered by Prometheus, which shows me my risk reward on average over a long period of time. So I've got my technical edge. But then the way that I structure my option trades is I structure them with a risk reward edge. So I've got two edges that I have to my trading, right? One for options, for tech analysis. The advantage here is that I'm risking a very small amount of money to make potentially a lot of money. So if you had a 50-50 batting average, and every time you lost $76, and every time you won 224, close to it, you have a winning, what I would consider winning system. Okay. The disadvantage here is that if you don't get the direction right, the trade doesn't work. The trade has to move, and you have to get directional right. But again, that's why we have the edge for MACD, payday cycles, and leading strategies. Okay, so here's going to be where we have our contest. Okay. Here's a not so ideal risk profile. Hopefully you can see the difference in between them. I'm going to flip back and forth a lot. This one has this really, really great curve that goes up. This one is also a 3-point vertical spread, but it doesn't curve. The risk graph is very linear. So here's the question, and I'm going to be looking into the chat room to see the first person to answer this correctly is going to win this mug. What's the difference between these two spreads? Why does one accelerate really fast in value while the other one has a linear profit potential? Okay? Go ahead and give your best answer. Anderson, Mike Anderson. You got it right, buddy. Good job. Let's see what else we got. He says different date to expiration, right? So that's exactly what it is. When I set up this vertical spread, because I knew in advance that this strategy only lasted on average 3.5 days, I bought 9 days of time, right? I actually was in the trade for 6 days, but I bought enough time to make it worth it. And that's why I had that really great acceleration. This is going to be me geeking out for a second, but there's going to be no greater acceleration in option than when it goes from being out of the money to in the money. Because you can buy an option with a 35 delta, and as it swings in the money, it can swing really quickly up to like a 65 to 70 delta. You'll never get that acceleration in delta ever again, right? And since I know that the trade only lasts a little while, there's no reason for me to set up a risk graph that looks like this, buying 3 months of time, because if it moves in 3 days, I only make a little bit of money. I don't take advantage of the leverage the options provide. Okay, so really, really great. Anderson, I'm going to, lots of good feedback, awesome. Anderson, I'm going to type in our support email. What I want you to do is just email our support, and we'll make sure you're set up with your prize. Okay. So again, the not so ideal risk profile. Okay, so really, really great job. Again, this is a really bad risk profile. Again, I'm always shocked when people tell me how they're setting up their vertical spreads, and they say, oh, I buy 1 strike in the money, and I sell a few strikes out of the money, and my risk reward is 50-50. And it's like a palm to the forehead moment for me. But, you know, this is the process of learning that everybody kind of has to go through this learning curve. This is a bad risk profile, okay? All right, so we got a little bit of time left. This one's going to be a little bit faster. I'll go through here. But essentially, the Tesla case study, 86% in 6 days, right? I paid $225 for this debit spread. Again, this was just a couple weeks ago. And I started selling at 350, 449, 402, and 480. My last sale here, because you can see I got in all at once, but then I staggered out. My last sale here, I think I made 113%, and this is supposed to say 2 days, but this was only in 2 days, okay? So you can see, entered for 225, got out for the last part for 480, that was 113% on the last part in 2 days. Let's take a look at the chart real quickly. Again, this is going to be a little bit faster. So people are asking, a lot of people in the chat room are asking, hey, do you ever short things? Well, yeah, I love getting short because things drop really fast and you can make some profits. Compare this 2-day spread to my 6-day spread in Apple. I mean, you can see how fast things drop, especially Tesla lately. Now, given Tesla's made a nice move up over the last week, but again, here's my favorite strategy for Tesla, okay? Essentially, if we were to look at the basic components here, we've got a bearish payday cycle confirmation, right? And when I open up my leading strategies for Tesla and I click on them, it just loads them right on the chart for me so that I don't have to really think about it. It's too easy. 46 wins, 33 losses, average win. This is why it's important. So the batting average is good. It's better than 50-50. The average win is $6.83, and the average loss is only $3.64. So the average win is almost twice what the average loss is, and the batting average is over 50-50. That's what we would consider to be a winning strategy. So those are 2 leverage points, right? Batting average being greater than 50-50, or average win being much greater than your average loss. That's what I would consider to be your leverage point from a technical analysis, plan your trade perspective, right? So this got me in right here around 189, and I got out at 180. Okay, why did I start taking profits at 180? Can anybody guess? Does anybody guess here? Bum, bum. So Joe says, the stochastics for S&P 325.8, that's the MACD settings, not stochastics, but good question. Bum, bum, bum. Lots of good questions. Okay, cool. So there's two parts of it, right? Two parts of why I got out here. The first one was, yeah, $180 was an obvious support area, right? That was an obvious support area. This is where it kind of bounced last time. The second part was, well, I know by looking here that the average down move when the strategy triggers is $6.83. So 189 less almost $7 gets me to about 181, right? So I can start, basically what I did is I got in at the end of the day here, and then as soon as I got in, I set good till canceled limit orders to get out between 180 and 182. Okay, and so that if I'm not at my front of my computer, it'll just trigger me out, right? You could use a risk graph and set the date for a couple days, and then look to see how much profit you're going to have at a certain price point, and then you add that profit to the debit spread that you paid, and then you have the price that you'll likely get filled at, and then you can just set it good till canceled, and it just triggers you out. Lucky for me again, Tesla, the day after I got in and it got short, it had this enormously crazy move to the downside, and I started taking profits actually that same day, and then got out fully the next day. Okay, and very similarly, what I did here was, when you look back on my strategy here, whoopsies, I did a 185 by 175 put spread. Okay, so the stock here was at 189. I bought the 185 here, and I sold the 175. Now, generally, I sell at support or resistance, but in this case, since Tesla had what I felt like a potential to crack 180 and drop a lot farther, I wanted to give myself a little bit more potential downside. So it was at 189, and I bought the 185 put, and I sold the 175 put, and I think I only bought 2 weeks of time. Okay, so that was kind of how I structured my trade. Again, I'm using technical analysis to find an edge. I'm using all of this great data here to tell me approximately how long on average I'm going to be in the trade for, so I know how much time to buy in my options, and then I can use this number here to find profit potential and know where to kind of get out of the trade, because I know how much on average I'm going to make with the strategy. And the strategy has been successful for 4 years in a row on Tesla. So it gives me a lot of confidence going into the trade with that, with all of that data, right? There's not a lot of guessing involved. Going through questions. And again, there's a ton of questions coming in. I really apologize that I'm not able to get to all of them. Yeah, this is a daily chart. Okay, cool. All right, so let's see where we are. All right, so Tesla case study. All right, so we looked at the chart on Tesla. Obviously, it feels amazing to make 106% in 6 days and 86% in 2 days in Tesla. So one thing I want to reassure everybody with is these are not one-time events. These kinds of stocks cycle like this several times a month. Again, when we look at, I like to trade Tesla. It might be too volatile for some people. But when we look at your Teslas, your Apples, these things cycle once or twice a month. So the opportunity to trade payday cycles and leading strategies is very frequent, right? They cycle a lot, so there's a lot of opportunity. So the reason I say that is because these, I just want to make everybody, I just want to make sure everybody's rest assured that these technical setups that I traded weren't anything special. They happen all the time, right? They cycle a lot. So there's always this great opportunity to trade these cycles, okay? All right, so really quickly, I wanted to highlight a student of mine. She wrote me an email and said, hey, Mike, I've been using payday cycle, the MACD. I turned $100,000 into $320,000, and I was like blown away by her email to me. And so I got her on the phone and actually recorded the whole conversation. It was a 36-minute interview with this with one of my students, Lisa. She's a stay-at-home mom. She trades now for a living. The cool part about it is she only trades stock and she only buys stock. She doesn't short. She doesn't trade options. She just buys stock. Now, clearly, she's at an advantage because the last 7 years we've had, an enormously bullish market. But what I wanted to highlight about this is she keeps it really, really simple. Okay, so for everybody out there who also wants to keep it simple and maybe a little bit confused or overwhelmed by all the option geeky stuff I was doing, rest assured that you can keep it really simple. You don't have to do these complex spreads like I do. You could be like Lisa. She just buys stock, keeps it really, really simple. Nonetheless, we got this really great interview, 36-minute long. We went over all the hurdles that she got over, some advice, some of her favorite trading strategies, everything like that. She's got an 86% win rate this year. Out of 197 trades, 171 of them were winners using simple payday cycles in the MACD. Right? Very, very, very simple. So I wanted to highlight this because I know we covered some kind of complex stuff today, and I just wanted to make sure that everybody could be, I keep using the word rest assured, but rest assured that you don't have to be complex. You can keep it really, really simple and still be successful. Okay. So after interviewing her, we were really excited about the email that she sent and everything some of our students were doing, and we decided to kind of put it together into a really great course, okay, which I'm going to be talking about in a second here. Okay, so far today, I've shown you a lot of stuff, right? I've shown you a powerful way to quickly, one, identify short-term direction using payday cycles, two, confirm that direction with the MACD. That's going to be available in any charting package you have out there. Substitute payday cycles for Hike and Ashy. Obviously, Wall Street IO, the website that I run, we have it too, okay? And I've given you a glimpse at the new technology that we're building, my team and I are building. I've got 2 full-time, amazingly brilliant engineers that work with me right in my office in Santa Barbara, California. And I'm working with them extremely close to develop tools for traders and myself, right? I've given you a glimpse of the technology that we're building, right, at Wall Street IO for Community. That includes our Smart Studies backtesting tool, which is the only backtesting tool that was created as a heads-up display over the chart. Okay, Prometheus and Leading Strategies, which is our super processor. Leading Strategies is the board that displays the results of our super processor. So you can kind of get a glimpse of the cool technology that we're building. Now you may be asking yourself, I really want these tools, but all these profitable strategies at your fingertips sounds incredibly expensive, and you're actually right. These kinds of tools are normally very expensive. If you think about what the big banks are building when they build supercomputers, they can spend $1 million up to several $1 million or $10 million building out their processes, building out their super processors and their supercomputers. It's a very expensive process to go through. Okay, big firms can actually, just for the processing part of it, they can pay thousands of dollars a month just on the data processing alone. Okay, so the good news for you today is that instead of paying thousands of dollars a month like the big firms do, you can get everything that I showed you today for only $97 a month with our starter membership. Okay, so this includes payday cycle charts. This includes Smart Studies backtesting tools that I showed you. This includes Leading Strategies powered by Prometheus. Okay, and I've got a couple of enormously huge bonuses lined up for everybody today. There's been a bunch of amazing questions coming in, and I just want to highlight them in a moment, but I wanted to talk about specifically these huge bonuses that we have for you that you can get between now and tomorrow night if you sign up. Okay, bonus number 1, the Payday Cycle Masterclass, $800 value. So this was a 6-module course that I put together to teach people payday cycles, right? This is what Lisa was using. This class is what Lisa was using to do her trades. Payday cycle basics, payday cycle candles, what each one of those candles represents and how they mean, what they mean and how to read them. Probability stacking, the idea of stacking different indicators of probabilities together so that you get a higher probability of success. The success blueprint. I think everybody who's swing trading needs this blueprint. Number 5 is really important because it talks about rating your trades. Rating your trades is really important and something that a lot of people don't do. I think that if you rated your trades and only took your A+ trades, you'd have a higher probability of success. So in this module, I show you how to actually rate your trades. Number 6 is strategy match, which shows you how to match the correct option strategy to the correct directionality of a stock. We cover 18 strategies for options in our strategy matrix, and I show you how to match it, basically. Okay, so this is a bonus that I want to give you because I'm really committed that you get the education. It's not just about having the right software. It's about having the education to not only know how to use it, but it's something that you can carry with you for the rest of your life, right? Bonus number 2, and this is a really big one, 6-week Build a Better Strategy Workshop, a $2,000 value. Okay, this is a workshop that we started last week. So week 1 and week 2 have already been delivered to everybody in our community. Strategy Foundation. Let's go ahead and go over them real quick. It's a 6-week workshop designed to create breakthrough results in your trading. So what's a breakthrough result? A breakthrough result is somewhere where you're blocked, like I'm bad at timing, I'm bad at taking profits, I'm not very good at managing my trades. Wherever you're blocked, this course is designed to unblock that part. And you actually learn and discover where you're blocked in this first part. We go through a 13-point checklist inside of your trading, so you're actually working on your trading to identify the specific areas that you're blocked, and then the next parts of the courses are designed to get you through those blocks. Okay, so again, strategy foundation, get clear on your goals and create a realistic roadmap to being more successful. The 2 essential elements even the quants use for trading in week 2, which was delivered this last week on Wednesday. Directional versus contrarian, why sometimes the not-so-obvious strategies outperform all the others. The 5 elements, everything you need to know about your strategy at a glance, and this is how you're able to do it in such a short period of time every single day. Finding profit targets, giving you the easiest, fastest, and accurate way to gauge profit targets in dollars and days, so you can be ahead of the game. And the options wrapper, which is all about applying leading strategies to the perfect option strategy, strike price, and expiration. Okay, so normally a 6-week workshop like this at Wall Street costs about $2,000. But as my way of saying thank you for attending this webinar and thanking TradeThirsty for hosting me, I want to give you free access to the 6-week workshop when you sign up for Starter membership. Again, that's only $97. Okay, so here's what you get with Starter again. You're going to get access to my 6-week workshop. You're going to get access to payday cycle charts, smart studies backtesting on the charts, leading strategies plus Prometheus, and we have some really cool tools coming out in a month that you'll probably get access to as well. It includes alerts, our stock and option university, access to our community forums, and the payday cycle masterclass. You can get all of that at wallstreet.io/TradeThirsty, and you can sign up for it right now. Okay, so I want to open this up to questions because I know that there's probably a lot of questions so far, and we will take a look. Okay, so some of the questions to think about. The first question, how are these classes delivered? So that's a really good question. Okay, let's take a look. So the classes are delivered right into your university section of the website, right? So when you go and you log in and you click on the university, you have this entire university, right? So the Payday Cycle Masterclass is here. It's 6 videos. And the Build a Better Strategy Workshop is right here. Okay, we also have some additional resources and things for you as well. Okay, so good question. Let's see. Let me take a look. Does it work with forex? We're currently not getting forex into our data. The data that we are getting is we have 8,000 stocks in our database, which includes Amex, Nasdaq, and NYSE, and ETFs. Okay. It doesn't include forex or futures. Okay, but good question. Yeah, unfortunately, we don't have data on the ES yet, but what we do have is we do have spiders, diamonds, Qs, and IWM. But good questions. Oh my gosh, lots of questions. Holy cow. Okay, real quick. I got a note from Tim. Tim says he just signed up. Thank you very much. Okay, so really quickly, Tim, thank you so much for signing up. I'm really excited to have you on board. What I want you to do first, the first thing I want you to do is jump over to the university as soon as you sign up. We've got a great Getting Started section. It's 5 videos that are going to walk you through our entire platform. Okay, so, there's me. Okay, so you're going to get all about our charts, all about our back testing, all about our strategy triggers, which unfortunately I didn't even have time to talk about today, but you'll learn through videos everything that you get. The second thing I want you to do is check out the Payday Cycle Masterclass, and then after that, the Build a Better Strategy Workshop. So thank you, Tim, for signing up. The first things that I want you to do right there are Payday Cycle Masterclass, Build a Better Strategy Workshop, and the Getting Started videos around our platform. Okay, so thanks, Tim. Really excited to have you on board, buddy. Are there any contracts with our membership? No, there's currently no contracts. If you want to be a member for 3 months or 18 months or 5 years, whatever you want. It's just $97 a month. We keep it really, really simple. Lots of questions. Yeah, good question, Mo. Asks about contracts and everything like that. Yeah, you stay a member as long as you need to, okay? Doug asks about trend lines and counter trend lines in the studies. Inside of our charting package, we have all of the ability. I didn't really get a tremendous amount of time to talk about everything that's included in our charts, but essentially you get all of the normal tools that you get in most charts. And so, yeah, I do absolutely use trend lines and support resistance and all the basic stuff as well. So really, really good question. And I think that, let me make sure I'm good here. I'm going to post up the link, if it hasn't been posted already, into the chat so that everybody can, it's already been done. Perfect. Thank you, TradeThirsty. So that everybody can see. Good question. Are there separate fees for using your platform around data? There's not. Actually, I pay the data for you. I write a huge check to the exchanges every single month for the Amex, NASDAQ, and NYSE data to be redistributed to our entire community. So I actually pay the data fees for you. You don't have any additional fees for the data. Okay? It's 15-minute delayed data. Okay? Does the price change after the first month? Nope, it's only $97 a month every month. We're not going to raise the price on you, okay? And we're going to continue to add new features to your membership as well. It doesn't just stop here. We've got an amazing pipeline of products coming out and features coming out for the next year, and we're just going to keep loading you up with cool stuff, okay? All right. Someone says, what is a Tesla MA crossover? It's simply just a moving average crossover when two moving averages cross. Okay? Scott, yep, we're actually working on a system to do that. He asks around scanning for stocks and kicking out the best opportunities. We're working on a new feature that's going to be released at the beginning of the year for that. Good question. Good question. The other thing, someone asks about Prometheus, and I know I only got another minute here, but people are asking about Prometheus and how our super processor works, okay? So currently, when I bring up leading strategies and I open up Prometheus, currently Prometheus, the way the super processor works is us as admins are running all the calculations, okay? We're not able to give everybody access to this little pop-up right here. Okay, we're running it in the background. Our servers are basically doing all the heavy lifting. But what we've done for everybody is if we don't have Prometheus run on the stocks that you want, okay, we have a very, very simple voting system. Okay, so if you open up a stock like, I'm just trying to pick up a random one. If you open up this one, we've run it for ConocoPhillips. But if we haven't run leading strategies and we're not giving you strategies for a stock that you want, all you have to do is you vote for it. It's as simple as that. You can see you cast a vote for ConocoPhillips. And that vote identifies our system to say, hey, Tim or Sally or Susan or John wants leading strategies for ConocoPhillips, and our system will go and run it for you and then just deliver it to your leading strategy board. Okay, so really, really good question. All right. So it says, thank you, sir. I will be enrolling. Lots of people said, thank you. This is awesome. Very, very cool. Yeah, someone asked about Yahoo data. One of the tricks with Yahoo data is because we use it commercially and we redistribute it to an entire community, we have to keep everything on the up and up with the exchanges. We're not interested in pulling data from free sources. We want the most accurate, consistently accurate data, and the best way to do that is actually to license it directly from the exchange because we want to make sure everybody has accurate and up-to-date, reliable data. But good question there. Okay, so we get it right from the exchanges. Okay, really, really amazing questions so far. Thank you so much. I think we're just about wrapping up here, and I think that's all the questions that I've seen. If I missed any of your questions, again, I apologize in advance. Go ahead and jump on this opportunity. It's only available till Sunday at midnight. You're going to get two of our biggest bonuses of the year, which I think are really going to help you kind of get up to speed really fast at wallstreet.io/TradeThirsty. Huge thank you to Jeanette and everybody at the TradeThirsty team for having me. I'm really excited about the next presenter as well. And I think that's pretty much a wrap. So I'm just going to kind of hang out, and if there's any other questions, I'll be happy to jump on them and answer them real quick.
Okay, excellent, Micah. And you can always, I'll leave you as an organizer. I'll take away your presenter status, but I'll leave you as an organizer so you could privately answer questions if you want by typing in those answers.
Fantastic.
And thank you for such an excellent presentation. wallstreetio.com/TradeThirsty is Micah's link for his offer today. It sounds like he's taking that thing down tomorrow evening, so if you want to get on board, you better do it now. It's going to make me dismiss you. Hang on, then I'll add you back. Just a second. Oh, I don't know how to do that. Oh, well, I don't know how to do it without just kicking you totally. So I'm just going to let you hang out for a minute. Just don't close it out. You said you're going to stick around anyway, though, so we should be fine.
Yeah, and I'm going to mute myself too, so you're good.